AJ Bell versus Interactive Investor, which is best for buying US stocks from the UK, where today I'm going to do a buy order for Facebook from both platforms and see which one is cheaper. But firstly, you got to know some differences. They both charge a rip-off fee for FX, foreign exchange orders. With AJ Bell it's 1%, and for Interactive it's 1.5%. You blooming little toe rags. 1.5%. They charge they get charged pips, and they charge 1.5%. You know how pip is? Add a couple of notes in front. 0.00%. So that's a negative for II. 1.5%. That's rip off. Another thing I know is that AJ Bell's platform sucks. Their platform is like it's 20 years old. They've not updated it. It sucks. You cannot place limit orders with AJ Bell for US stocks. Not only that, you cannot place limit orders for US stocks listed on the London Exchange. You can place limit orders on foreign stocks. For US markets up to 90 days, so that's a strong positive. Otherwise, because the problem is you have to sit there and look at the price with AJ Bell. You can't just fire and forget a limit order. And a negative for interactive investors is inspectors. What did the other inspectors? They need it inspecting with an exchange fee rip off. For interactive investors, they do not allow you to invest in US stocks listed on the London Exchange. What the hell is all that about? II does allow some, not all. For instance, they allow Google and Alphabet and Facebook, but not Amazon. Why? Amazon's bigger than either Google or Facebook. You know, AJ Bell is weird. Their rules and stuff is a bit weird. And the negative, they do not allow limit orders. That is in my book, that is a massive negative. And their platform is ancient, it's slow. Slow to update, slow. You have to wait around, 30-40 seconds. Also, with interactive inspectors, you cannot buy spot. You have to put a limit order in, which is fine. If you're buying a share, you just put. If you want to buy it now, you just put the limit order virtually at where the spot is trading. So that's a minor negative. With AJ Bell, you can buy at the spot. They give you an instant quote. Interactive investors do not give you an instant quote. You have to put a limit order in with AJ Bell. So what that means is that because you're sat there, you have to sit there with AJ Bell. You can take your time, 10, 15, 20 minutes, trying to pay slightly less than what they're offering, and usually I can shave off a few decimal points off the percent with AJ Bell by just waiting and watching for the better quote. That means at least it covers some of the FX fee. With II, you have to use limit order, which is fine as well. You can just set the limit lower. So in trading terms, II is obviously the lot better platform because of the limit orders. I wouldn't use stop losses for investing, because then you might get out at the price where you would normally want to buy. So I wouldn't use the stop orders. Are irrelevant for both, but limit orders are important. And AJ Bell is a big fat fail. They do not allow you to put limit orders to buy or sell. That is a big fat fail. AJ Bell, you need to update your platform. It sucks. I'm thinking of moving my blooming SIP. Interactive investors, you need to cut your foreign exchange fee 1.5%. You blooming rip-off merchants. Yeah, that's a right rip-off. You're probably already aware of the other fees they charge: monthly fees, quarterly fees. For instance, AJ Bell does charge you £10 for buying, but more for foreign. I think it's £20 to buy a foreign share, so Again, AJ Bell overcharges. II is £7.90. It's £9.99. It's £7.99 to buy a share, but they give you a rebate on, and £10 a month, but they give you a rebate of that for each share you buy. £10 minus £2 it costs per month, because £8 is the fee to trade. So let's do a direct head-to-head comparison between AJ Bell and Interactive Investor. How much does it cost to buy shares in Facebook right now today? And also I'm going to see what the price would be to buy on the London exchange from AJ Bell at the same time, to see if there's any major difference. Yeah, there should not be. Well, there should be. There should be a difference because you don't pay exchange fee. But I suspect they build it all into the quote that you get AJ Bell. Anyway, we're going to find out. So we're going to test those three things. One, how much does it cost to buy a stock with AJ Bell versus II in Facebook, and then to see if there's any difference between London, buying a US listing on London or not with AJ Bell. Obviously, you miss out the FX fees for buying and selling. Oh, another thing I should mention, that II allows you to have dollar balance on your SIP, yeah, and your trading account, whereas AJ Bell does not. They don't allow you to hold dollar balance. So, for instance, if you buy and sell shares in dollars, you have to pay the exchange fee. II doesn't. Obviously, for ISAs, you can't hold dollars because of HMRC rules. AJ Bell again! You're really peeving me off. They don't allow you to hold dollars when you are allowed to hold dollars by the rules in your SIP. I'm gonna move my SIP. Yeah, anyway, let's first do the example. I'm gonna log in now, and then we're gonna see what the figures are. Okay, so we logged in, and let's get a quote with Facebook. Nasdaq, yeah, deal. Buy, no limit orders. What should we buy? Oh yeah, let's do quantity same. 20 shares. Yeah. Get quote. 4,000. So the total cost is £4,980.77. They charge £10 for dealing, 50 for FX. So 50 for FX and £10 for dealing. 4921.6 was the cost for 20 shares of Facebook. Right, and the price quoted is 335.4. Okay, so now let's do the same for Interactive Investor US, Facebook. There we go, buy 20 shares, enterprise. Look, they see they don't give you a spot. Alright, what's the 335.2? We'll use that price, 335.2. That's what they're offering. Yeah, bid price. Okay, so let's preview the order. Is 4995.24. Oh, that's allowing for a trade credit, so I'll put that back on, plus the trade credit, and you can see it's a lot more than AJ Bell. So basically it's 0.045% more. See, so they're charging cost of the shares 4,995, then the dealing cost, but they give you trade credit, so I'll take that off. Yeah, so they're charging me £5,003, whereas AJ Bell is 4,980. Let's get a requote in case it's gone up. It's gone down. 4,976. See, this is what I do. With AJ Bell, you can re-quote it, the price is lower until you're happy. I normally re-quote it lower the cost of the dealing charge. It doesn't take long. So it's 80 So I keep re-quoting it until the dealing charge is gone. Yeah, so it's 80, so I want to get to 70 or less. So I re-quote it. 75. I just make sure you don't accept call unless you want to buy it. See, 75. So I just keep re-quoting it. With this one, there's no re-quoting. For this one, you have to set the limit order lower. So you would set the limit order at 334. Then there's a risk that you don't get it. You should get it, or even that. It has to be well below 333. So interactive investor charges you a lot more in terms of the fees. Oh look, we've gone down below 70. Shall I buy it? What's the spot? 335. It's not 335. Oh yeah, let's compare what the spot prices are as well. Amend. Current spot is 334.66. And here the listing. Current spot. What is the? Let me do a refresh. I don't think that was updated. Current spot is, yeah. See, they even have a higher spot price than the II. Bid offer. That is weird. They add $1. They add a percentage on. It looks like, I don't know what they do. Or if I do a sell, will it be different? Obviously, it matters if it sells. Let's see. Alright, I forget it. So let's see what the latest quote is. AJ Bell platform is ancient. It's like 20 years old. They need to update it. 68. And what's the current? Well, let's do it. 334.5. 334. I'm doing it at the spot they're offering. So it's 68 there, and here it's 90, 91. Because you have to add that £8 back on. Obviously, if you allow for the trade credit, first trade of the month, then it's 83 versus 68. So obviously that's the exchange fee that they don't show you, because otherwise you'd be scared off. So AJ Bell wins in terms of trying to buy at the spot price, because it has a lower FX fee of just 1% versus 1.5%. With II wins in terms of their platform. You can place a limit order, you know. I don't have to sit there watching. I can place a limit order at, say, 329. Yeah, and that would allow me to buy Facebook at substantially less than AJ Bell. So 68 versus 900, that's £60 less. That's the power of limit orders. You know, a nearby limit, achievable, so I don't have to sit there. That's a huge. That covers the fee and the FX fee. You know, let's divide it. What percentage is that? Equal 5908 divided by, what was it? 4968. That is 1.2%. So II wins overall. Also, II allows you to hold currency, obviously not in the ISA, but in the Sept. You can hold currency in the Sept and in the trading account, whereas AJ Bell, this piece of garbage platform, does not allow you to hold dollars in there, any other currency in their SIP. So which platform is better for buying US stocks overall? It's II. AJ Bell is 20 years out of date. They do not allow limit orders on US stocks. They do not allow limit orders on US stocks listed on London. They do not allow you to hold dollars in your SIP. Their platform sucks. AJ Bell platform sucks. I'm seriously going to think about moving it to II. I'm going to send them a note. I go, your platform sucks. You need to allow people to hold dollars. Yeah, I'm going to send them. I go, your platform sucks. It's 20 years out of date. You need to allow people to hold dollars in their SIP. Or else I'm going to move it mine to II, Interactive Investor. And you need to allow limit orders on US stocks. And why you don't allow limit orders on US stocks listed on, hey, let's see what the price is for Facebook listed on London. Wait, let's get updated quote first. Oh, gone now, isn't it? Can I go back? No, I can't. Facebook listed in London. Alright, I have to get the okay, first of all, let me just get another quote. Right. Okay, so now I'm going to test the price that they quote for Facebook listed in London against Facebook listed in the US. First, let me get an up-to-date quote on the US. So it's 49.71.7. Now I'm going to go quickly and see what it is for. That's the US ticker in the UK. Right, select account. He has to be at best again. No limit orders. Right, compare. 20. Get quote. Whoa, that is a massive difference. Whoa, look at that. That is a massive difference. That's without the exchange fee. So you save on the one. Well, you save. Don't save. So what you save is 1%. Oh yeah, well, yeah, you saved on the exchange fee. Let's get another re-quote. That is a massive difference. All right, let's get. Let's see if we can place limit order. Quantity 20. Let's see if you can set. Oh, you have to do a limit order in British pound. What was it? Let's do a 230. I know it's more than that. Expiry date. Right, see, you can't place limit orders. Yeah, limit orders not available for this event. Yeah, piece of garbage platform. Piece of turd platform. So what I would advise is this. If you got an AJ Bell account, buy all your US stocks, and you don't want to move it, buy all your US stocks on the London Exchange if you can, but there's no limit orders. You will pay substantially less in fees. You miss out the FX fee, but there's no limit orders. That's negative. Conversely, if you're paying an FX fee, buy it with AJ Bell. With that, I mean with the Interactive Investor, because you can then set limit orders. Yeah, what's the current? 333 has gone down a little bit. So I would basically II Interactive Investor is the clear winner. The 1.5% to 1% fees, the red heading. Their platform's a lot better. You can set a stop, like I set a stop at 329.5. It will get executed, and for that I will pay £4,908. With II I would pay a lot more, but buying it on the US exchange, for which they only do for a few shares like Facebook and Google, Alphabet, They don't do it for Amazon for some stupid reason. Yeah. See, they don't do limit orders. That's another negative. So at quantity 20, let's see what the quote is now. So for spot orders, obviously, you know, 4,009 has gone down. Facebook's dropping. But I would set a limit of 329, which 329 on theirs is same. Look, we're getting the same price now. The only difference is this is spot and this is limit at 329. So by following this test, obviously I'm not going to buy any US dollar shares with AJ Bell, and the problem with interactive investors is, yeah, you could open a second SIP. I could do that. You can't hold. You cannot hold within. I've got a trading account, but we got a £12,000 capital gains tax allowance in the UK. So you can hold some in a non-SIP if you haven't got capital gains elsewhere, like cryptos. That's the problem. Cryptos will eat your capital gain. But you could open a second SIP. So there's that. Obviously you can only fund one per year, tax year. I'm sure you can only fund one, but it's up to your salary limit. For it's £40,000 limit SIP that you can fund. But I am tempted now to open a second SIP and fund it with dollars, and not it's complicated, isn't it? But the better platform is the interactive investor. Definitely. Definitely. Look, if AJ Bell, I would be paying 4,000. Was it 68? 4,906 on US listed. Now if I do it, Facebook deal on. $57, so £50 more, £51 more. That's the FX fee. You're basically paying the FX fee. So buy US, if you're buying US shares with AJ Bell, buy those listed only listed on the London. You'll save on the FX fee. Whereas with II, you get the benefit of placing limit orders. So it swings. If you're thinking of opening an account, interactive investors is the one to go for, not AJ Bell. They suck. And if you got an account with AJ Bell, you should consider the pros and cons of moving it to II. They might have some offers going off, you know. They might have an offer. Move your SIP. Let's have a look at the offers. No, they don't. AJ Bell. They might have some offers going. Pay no SIP fee for 6 months. Yeah, it's £10 extra per month you have to pay. So it does cost £10 extra. Whereas AJ Bell's fee is less for SIP fee. What's their SIP fee? I don't know. Let's have a look what their SIP fee is. AJ Bell SIP fee. How much? See, it's 0.25% up to £10. Same £10 a month. £10. So they charge the same for the SIP fee, so there's no difference, but the II is a better platform. So you should look out for offers for moving your SIP. Free, yeah. Free for them, not for you. You have to pay. Yeah, extra £5 per month. See, you have to watch out for these freebies. That's nothing, £60, that's piffle. If they say offer to pay, see, when you transfer your SIP, you're going to incur a cost. Unless they offer to cover all the costs of the transfer. So I did a web search for transferring SIP from AJ Bell, see what the costs were, and it comes out basically at £10 per holding. So I've got roughly 30 holdings in my SIP, so £300. Could reduce that by selling some ahead, you know, at the opportune times. Build up more of a cash balance and then transfer, whilst you buy positions in the other SIP. So there's some overlap in terms of fees, but £10 per holding isn't too bad. I was expecting it to be more like £600. Also, you could be on the lookout for any offers from Interactive Investor. So there you have it. II is the better platform. I would, if you're thinking of opening a SIP or ISA, open it with II. It's a better platform. Don't be bothered about the 1.5% versus 1% FX fee. You can negate that, as I've just demonstrated. Just set a lower limit order to wipe it out, or if you're stuck with AJ Bell or being logged out. If you're stuck with AJ Bell, then use the one US stocks listed on London. But II is definitely by far the better platform to buy US stocks with overall. You can hold dollars in their SIPs. You can hold dollars in their trading account, which you cannot with AJ Bell. AJ Bell need to up their game. They're going to lose a lot of customers. I'm going to send them a note saying that let's send them a note. A note to AJ Bell. Let's send them a little message, yeah? Hi. You need to upgrade your platform, else you are going to lose your customers. Number 1, no limit. You need to allow limit. Does. You need to allow dollar holdings in the SIP. II does. What else? Shares I said II and need to make. Of customers there. They're not going to do anything. But I'm probably going to be moving my SIP and opening a SIP with the II. Well, £10. I don't want to pay double. I'm just going to transfer the SIP, isn't it? Yeah. You could buy some shares with a trading platform, but there's the capital gains tax. 12k, so it's limited. So to allow it, so I make capital gains outside. I could probably about 6,000. So I could 6,000. Say if you're expecting 20% per annum. Let's do the maths. 20% per annum. Like maximum. So 0.2 divided by 6k. So it's 30k if you're expecting 20% per annum, and you're allowing for 6k. For 12k it'd be 60k then. So you can't invest much outside of an ISA or a SIP. Well, the SIP allows for holding foreign exchange. You can't, outside ISA, 60k, 50k, call it. Say if it's 15% return. I think we got drunk on returns. So if it's 6, that's equals 6. $60k at 15%. At yeah, and if you had 12k. No, it's 40k. Sorry, 40k, 50%, 15%. So if it's 12k, it'd be 80k. Yeah, that's the problem. You got the tax. Where's the current rate? Let me have a look. I'm sure it's 12,000. I don't think they've increased it. What's the? See, they've not increased it. 12,000. Less for trusts. Ooh, I do investment trusts. Is that what they mean, investment trusts? No, it's other, not investment trusts. So you don't get much. Usually, I let everything else soak that up. So the main bulk is in shares, and that's all tax free. So I don't have to worry about calculating it. But if I start holding investments in outside SIP and ISA, then I'm gonna have to do work calculating what to invest when, what to buy and sell, for the CGT to use it up. That's the problem. You need to time it, sell when it's overvalued and buy back in the new year when it's undervalued. There'll be a lot of that. It's doable. For at least up to, what is it? Up to 50k. You could do a portfolio in your trading account for 50k if you buy and sell to allow for CGT to reduce it. Obviously you can just keep holding on to the shares, but then you're going to get hit by a massive CGT when you come to sell. So it's doable. You could build a portfolio. Yes, it's doable. And the benefit is that you can access it instantly. So that is an option. To have, say, up to 100k portfolio outside of a SIP or ISA, and then you just do bed and breakfast sitting to reduce the CGT. But 100k, that's too much. That's not gonna, look, shares doubled that I bought in March 2020. It's not going to be more like 50k. So for 50k you could do outside. And then I'm waffling on now. So I've answered your question, which is better. AJ Bell sucks. II is better. The negative is high FX fee, which you can amend by setting lower limit to eat all of the FX fee. Yeah. So you can negate it. II is the winner. I'm going to send them that note to let them know. Then I'm going to investigate moving my SIP. I could just, you can have as many SIPs as you want. Yeah. You can have as many ISAs as you want as well. Obviously it's better to have them all consolidated for management purposes. And there's no real benefit of having multiple SIPs because they're going to charge you monthly fees. You're going to just end up paying double the fee. Yeah, you could have, if you got a large portfolio, you could have 2 SIPs, but it's just better to consolidate it. £10 a month, 120. And the benefit is there are differences between the two platforms, like I've just shown you. AJ Bell allows you to buy US some, only a hand, not even like probably 5 or 6. Only allows you to buy 5 or 6, and without limit orders on London. Whereas II doesn't allow you to do that. That's negative. Plus AJ Bell gives you instant quotes. You can trade at the price. II does not allow you to do that. But sometimes I've noticed AJ Bell's quotes are higher than spot. Sometimes it wasn't in this example. In this example, it wasn't the case. But sometimes the price is higher than this between the two platforms for some reason. I think it's because obviously they're spot. They're allowing for some, extra profit to cover their. If the market is illiquid, they add an extra spread on. So there's that. London market is less liquid. So what II does is, what AJ Bell does is add a little bit extra onto the spread to allow them to buy the stock, because they're just giving you a quote, 15-second quote, and if the market is not liquid, if there aren't any makers out there making a market, then they add a little bit extra to entice, to fill the order. So there's that. In this case there wasn't, but I've noticed that before, and it can be up to 1%. So it can negate all of the benefit of not paying the FX fee on a US stock. I noticed that the other day when I was doing this similar exercise for Facebook, when I had the idea of doing this video. The Nasdaq quote was 1% less than the for the London listing, which is obviously due to lack of volume. Anyway, that's the end of this video. Do subscribe for new videos, and do consider becoming a patron for my comprehensive in-depth analysis that flagged of the current stock market correction before it happened. In fact, my analysis of 1st of September warned we are now entering the maximum period for stock market uncertainty and a probable significant correction and even a crash. And that was on 1st of September, just as the few days later the stock market started to tumble. Go look at my Patreon post for that. Comprehensive full spectrum in-depth analysis for currently just $3 per month, which is going to go up to $4 per month. So don't blow it. You can lock it in. That's peanuts. That's nothing compared to what you're getting. Anyway, end of this video. Stock market FOMO hit September brick wall. Dow 2021 trend forecast current state. My latest comprehensive analysis of the stock market has just been posted to Patreon. A full spectrum analysis that concludes in a detailed trend forecast into the end of 2021 and then continues all the way into 2022 with indications for what to expect even for the remainder of 2022. Analysis that had me dig deep to clear the mists of time, all the way to deep analysis of the seasonal trends on a scale that you will not see anywhere else. From the usual seasonal analysis that's expanded on multiple time frames to the new short-term seasonal trend and the presidential cycle, best time of year to invest in stocks, and a 2022 seasonal investing pattern, and then putting it all together into a final stock market trend forecast, and then coverage of AI stocks and my buying plan, as well as the high risk stocks portfolio. And then we take a look at Afghanistan, China. The comprehensive analysis that took me a good 2 weeks to do this analysis. Whilst my very latest analysis is a silver price trend forecast from October 2021 to May 2022, and a lot more than that, including the risks of Chernobyl and more, as well as covering the stocks, AI stocks portfolio, all first made available to patrons just the other day. And again, for immediate first access to all of my analysis and trend forecasts, do consider becoming a patron by supporting my work for just $3 per month, due to increase to $4. Lock it in now. And here's the schedule of my forthcoming analysis. Silver price trend forecast, stock market trend forecast for September to December, how to get rich, which is 90% complete. This is patrons, exclusive to patrons. It's taken me a good 6-7 months, more now, 8 months of hard work on this, and it's no BS, hardcore, telling you exactly how to get rich. Well, what I've learned from my 35-year career in trading, investing, and in business, or what it takes. Straight to the point rules, no BS, no filler, just hardcore. Then we have a UK price trend focus, and I'll update my US house prices and a quick look at Canada and the US dollar and British pound analysis, and finally gold, which I'm not really interested in, but patrons asked for it, so I will look at gold. Silver first and then gold. Silver, since crypto I've gone off silver and gold. I have positions in them, but not significant. So again, for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. That's soon set to increase to $4. That's not much. I'm seriously underpricing myself. Some patrons say I should be charging 100 times. The quality of analysis you're getting is worth 100 times what I'm charging for it. But you have to remember that I'm coming from the vantage point of giving my analysis away for free, which I did for 15 years on the Market Oracle website. 15 years. And I was only forced to go to patrons because everybody was ripping me off, copying everything, and trying to deal with all these thieves was like playing that, hitting the thing on the head and another one pops up. It's point I just gave up. I go, alright, I'll try Patreon. If this doesn't work, then I'm gonna stop publishing my analysis. I'm just gonna trade and invest. But Patreon seems to be working. I'm actually capitalizing on my investment. Remember, I am a capitalist, I'm not a communist. So I have to capitalize on what I give out, so I'm not going to do it. So the Market Oracle website runs at a loss because everybody's ripped it off. There's no ad revenues and whatnot. So that was the way I capitalized on it before. And now I'm capitalizing it through Patreon to some limited degree. At least it covers the cost for Market Oracle and other online activities. So that's good. Anyway, enough of this waffling. See you in the next video. And do consider becoming a patron as we defend ourselves, protect ourselves from the rampant money printing inflation by the central banks insane money printing as though it's not going to feed through into wage and price inflation. Big inflation is coming, as I've been flagging for, well, over 6 months. It's more like a year now. And that's why I was saying last year, if you're thinking of buying big ticket items, do it now before the price hikes, which have transpired. You know, I bought a Corcher K7 for £340. Current price on Amazon is, was it £565, and similar for lots of other tech items I bought. For instance, the components in my PC that I ordered in January and got delivered in March was £3,100. Current price of the components is over £4,000. Crazy, the inflation is here, and it is accelerating regardless of what the indices say. So protect yourselves by investing in assets that are leveraged to inflation, and AI tech stocks are leveraged to inflation and are about to get discounted. So do subscribe to my YouTube channel for such analysis, and do consider becoming a patron.